Welcome back everyone. This is a brief update about the gold market. Gold's prices over the past 7 days strengthened, reaching a peak on Friday, yet since Monday's opening relented substantial ground as the market sentiment tended to improve, mostly due to the easing of the lockdowns in various parts of the world. It was characteristic that European countries and some US states hesitantly started to slowly lift restrictions, lifting also demand for riskier assets. We expect the process to be quite delicate, as any effort to lift the lockdown measures imposed risks a second wave of coronavirus infections. Hence, lots of ups and downs, along with a number of setbacks, could be in the cards for the market sentiment and inherently gold's prices. Monday's movement of gold was characteristic, as at the same day gold's prices weakened while US stocks tended to rise. Both moves tended to originate on the current improvement of market sentiment. However, it should be noted that the market sentiment may prove once again volatile. News about actual medication which fights the coronavirus effectively may be required before gold's bulls lay to rest on a more permanent basis. Various reports, though, state that there may have been additional reasons for gold prices to drop. Analysts tend to note that gold prices started having bearish tendencies since Friday, as investors may have booked some profits taking advantage of the high prices reached that day. Analysts also mentioned that such profit taking may prove to be short-term though, given that demand for gold could continue. However, deeper fundamental issues tend to underpin gold's price in the coming months. Given the global economic slowdown caused by the coronavirus outbreak and subsequent lockdown measures imposed, we could see available income for gold purchases dropping. Analysts tend to note that traditional gold consumers in India and China tend to buy less lately. However, the case of China may differ, as a number of markets and shops may have been closed. In every case, it is understandable that without demand for physical gold, high prices may be difficult to be maintained for the precious metal over the next months. The same seems to apply for central banks. Central banks such as Russia's and China's may be reducing purchases as they concentrate their efforts towards supporting their economies. Yet low rates of central banks around the world tend to lower yields of bonds, hence increasing the attractiveness of gold. In the coming days, Fed's interest rate decision may prove a market mover for gold's price, with various possible effects for the bullion. The bank is widely expected to remain on hold, keeping rates unchanged in its meeting, yet may be widening its monetary stimulus for the US economy. Should the USD weaken from the decision, given that the supply of USD in the markets could rise even further, we could see gold's prices starting to aim for new highs. Analysts tend to note that gold may benefit from widespread stimulus measures, as it is often seen as a hedge against inflation and currency devaluation. Also, the US GDP release tomorrow could weaken the US dollar, as expectations are for a contraction of the growth rate in Q1. The mix could potentially create bullish pressures for gold's prices, as it could create a weakening of the US dollar. At the same time, it should be noted that the release of the initial jobless claims for the past week on Thursday and the ISM manufacturing PMI for April on Friday may not pass unnoticed by gold traders. Moving now on to gold's 1-hour chart and our technical analysis. Gold's new rally in the past week reached a peak on Thursday, testing the 1738.50 resistance line, and after another unsuccessful attempt on it on Friday, rolled down only to bounce on the 1695 support line during today's European session. As the downward movement seems to have stopped for now, we tend to switch for the time being our bearish bias in favor of a sideways movement. Should the bears regain control over the precious metals prices, we could see it breaking the 1695 support line and aim for the 1674.40 support level, which contained the drop of gold prices on the 20th of April. Even lower, we find the 1660 support barrier, which held ground when gold's prices dropped again on the 21st of April. On the flip side, should the bulls take over, we could see gold prices testing the 1717 resistance line, which withheld gold from ascending and ignited a tumbling of prices yesterday. Should R1 be broken, the next level could be the 1738.50 resistance line, which marked last week's peak, while even higher we find the 1750 resistance barrier, which is our limit for the upside of gold's prices for now. We hope that you may have found something useful in this report, yet once again, all decisions are up to you. From all of us here at IronFX, best wishes for solid trading.